And so if you want to preserve your wealth, an investor has to convert their currency into assets that are scarce, desirable, portable, durable, and maintainable. So what is Bitcoin? What you see is $900 trillion divided by various asset classes, and Bitcoin, as of the summer, was about a $500 billion asset class. The world reserve currency, the US dollar, is collapsing versus assets such as the S&P index. And on average, what you find is the United States dollar is losing 7% of its value each year for the last 100 years. Now, if you look at government statistics in the United States, they will tell you that the inflation rate's about 2%, and they'll show you a graph like this, which shows that the dollar has lost 94% or 95% of its purchasing power over this 100 years. But that's based upon the consumer inflation rate. Consumer inflation is the lowest inflation rate. In fact, the producer price index is a higher inflation rate, and the asset inflation rate is higher. So it's a mistake to think that $26 in 1910 or 1920 is worth $1 in 2020. If you look at the US dollar versus other assets, you can see it's losing value at a much more rapid rate. So the consumer goods rate is minus 93%. The US dollar versus gold has lost 99% of its value. We went from $20 an ounce to $2,000 an ounce, and so 99%. And the US dollar against the S&P index, which is the US dollar against a corporation, a successful competitive company, or the US dollar against Miami Beach real estate, has lost 99.8% of its value over those 100 years. Now, let's focus in on why the dollar loses value against real estate so rapidly. You see, what you notice is there's a fixed amount of beach, and all those buildings on the beach are there because the value of an acre of land on that beach is very expensive. In fact, the value of an acre in Miami Beach about 90 years ago or 100 years ago was $10,000 an acre, and a few years ago it was $10 million an acre. Today is $20 million, 1,000 to 2,000. Now, why is it that the price goes up so fast? And the reason why is because only God can make more beachfront. It's a certain amount. It was that amount in 1930. It's that amount 100 years later. And so as the money supply expands, that price goes up proportionally. So that's a fair yardstick. And what you would say is the beachfront property is scarce, desirable property. Now, that's the strongest currency in the world, the United States dollar. The U.S. never fought a war on its own land. It never lost a war. It's been the dominant global power for 100 years. Just about every other currency went to zero in that time period. And what you find is international currencies are generally collapsing at a faster rate, oftentimes 14% or even more per year. So that means that in the last 20 years, the rupee is down 47% against the dollar, right? The rial is down 62%. The Pakistani currency down 81%. The Turkish lira down 96%. And the peso, unfortunately, is down 99.8% against the dollar at the same time that the dollar is collapsing against the S&P and against real estate. In fact, the US dollar lost 75% of its value against scarce desirable assets. Most investors think that they're smart, and most people think that investing is the solution. But it turns out that investment gains are generally just driven by the inflation rate. If you look at this chart, the green line is the money supply in the US dollars, and the red line is the S&P index, the stock index. The companies are doing things. They may be growing 2% a year, but the same 2% a year of improvement in productivity is being offset by 2% chaos and destruction and risk and liability that people don't pay attention to. And so when you net it all out, a portfolio of companies is really just tracking the inflation rate in the money supply. And that means that if we look across investing and we look at asset classes, you can see the government and the mainstream media would have you think the consumer inflation rate is 2%. That lower, the 2% line is the consumer inflation rate. Most of these investments and asset classes can beat the 2% inflation rate, But as you can see, they can't beat the real inflation rate, the asset inflation rate, or the money inflation rate, the rate at which money loses value against scarce desirable assets. Now, as you can see from the chart, the worst investment is a commodity. You don't want to buy oil or natural gas or lumber because human beings are really good at producing lumber and oil and natural gas. And so commodities and cash don't work. Then if you look at the average investor, they're getting 2.9% return because they're diversified. Your consumer home is doing a little bit better. Bonds are a little bit better, and the diversified portfolio underperforms inflation. If you look at the S&P index, it's about the same, right? You're getting 7.5% return against about a 7 to 8% inflation rate. But all you're doing is just keeping up with asset inflation. You're not beating it. The only asset classes that beat it by a little bit, REITs, real estate investment. What this tells you is that if you own the most desirable property in the middle of London or Paris or New York City, you might be able to slightly beat monetary inflation. And so if you want to preserve your wealth, an investor has to convert their currency into assets that are scarce, desirable, portable, durable, and maintainable. Those are the 5 criteria that matter. And you have to evaluate every asset against that. So what is Bitcoin? Bitcoin is the most powerful digital monetary network in the world. But it is simultaneously 4 things. Bitcoin is an asset, it is a network, it is a protocol, and it is an ideology. And many people misunderstand it. They think, oh, it's just a cryptocurrency. But I think when you start thinking about asset, network, protocol, and ideology, your eyes open. Many people say, well, Bitcoin's not backed by anything. What's it backed for? It has no intrinsic value. And this, they grossly misunderstand the network. Bitcoin is secured by 4 types of power: computing power, electrical power, economic power, and political power. The computing power is 460 exahash. That's all of these millions of Bitcoin miners, custom silicon, and they are channeling 16.5 gigawatts of electrical power into 460 exahash. 16.5 gigawatts is 20 basis points of the power in the world, so it's a small fraction. But 460 exahash is what makes Bitcoin truly secure, because that's all the computer power in the world. 16.5 gigawatts is more power than the energy used to propel the entire United States Navy. It's a lot of power. 460 exahash is all the computer power anybody else can muster. Bitcoin's secured by economic power. And if you look at the 4-year simple moving average of Bitcoin, and then you look at the supply, you conclude about $560 billion have been invested in this network. And you got to expect that the people that invested the $560 billion are going to protect it using all of their resources and influence. And then finally, you've got about 220 million holders. They're also going to use their political influence to protect the network. And so when you're investing in Bitcoin, you're protected by 4 types of power.